Elon Musk is worth roughly $300 billion. This sounds like an amount of money. It is actually a large collection of legal agreements, stock certificates, debt instruments, and people who become nervous when spreadsheets change color. The interesting part is not the number. The interesting part is what happens when you try to move it in a single business day. Let's start with something simple. A wire transfer. A standard domestic wire transfer at a major US bank has a daily limit. For retail customers, this is usually around $100,000. Business accounts can go higher, sometimes into the tens of millions. But $300 billion is not tens of millions. It is, roughly, 3,000 times the GDP of Tuvalu. Your bank's wire transfer interface was not designed with this in mind. Moving hundreds of billions of dollars in a single day would immediately involve banks, regulators, compliance departments, and several people whose job titles contain the word senior. That's just the banking layer. The assets themselves are a separate problem. Most of Musk's wealth is not in cash. It is in equity shares of Tesla, SpaceX, and X, held in quantities large enough that selling them on the open market would immediately begin destroying their own value. The act of selling that many shares is also the act of making them worth less. You cannot spend $300 billion in one day because approximately $200 billion of it ceases to be $300 billion the moment you try. So let's say you accept that. You'll spend what you can actually convert. Call it $50 billion in liquid or near liquid assets. That's still $50 billion to deploy before midnight. You could buy real estate. The entire residential real estate market of Las Vegas trades about $400 million per month. Absorbing $50 billion in Las Vegas real estate would take roughly 10 years of the city's entire housing supply, and you would own, by the end of it, a significant fraction of the driveways, cul-de-sacs, and HOA-governed communities in Clark County. The HOA paperwork alone would require a dedicated filing system, a warehouse, a forklift to move the filing cabinets, insurance for the forklift. At some point, you are hiring people to manage the insurance on the equipment used to store the documentation on assets you cannot yet legally transfer because escrow takes 30 days. You could try purchasing goods instead. Physical objects. If you spent $50 billion on standard commercial shipping containers, loaded with whatever you could source in 24 hours, you would have approximately 200,000 containers. The Port of Los Angeles processes about 10,000 containers per day. Your containers would back up the port for roughly 3 weeks. Cargo ships would idle in the Pacific, burning fuel at around $20,000 per vessel per day, waiting for berths that would not open because the berths would be occupied by your previous containers. A harbor pilot would file a complaint with the Coast Guard. The Coast Guard would file a report with the Maritime Administration. An analyst at the Department of Transportation would add a new row to a spreadsheet and discover the spreadsheet was not wide enough. You could try something faster. Treasury bills trade in the trillions every day, so liquidity is not the problem. The problem is scale. A purchase of $50 billion in T-bills in a single session would move yields by a measurable amount. Bond traders in Chicago would notice. They would begin trading on the movement. The movement would affect mortgage rates within 48 to 72 hours. Somewhere in Ohio, a first-time homebuyer would receive a revised loan estimate from her lender, for reasons her loan officer could not fully explain, costing her an additional $12 per month. She would call the bank. The bank would say there had been market activity. She would ask what kind. The bank would say it was hard to summarize. By now, it is approximately 3 p.m. You have spent, perhaps, $18 billion on a combination of real estate, shipping infrastructure, and fixed income instruments. You have also caused a mild disruption to the mortgage market, generated 3 regulatory inquiries, and created a port-wide container logistics incident that will require its own after-action report. You still have $32 billion and about 9 hours. The Federal Reserve would have been watching since mid-morning. Somewhere, 2 economists are missing lunch. By midnight, you have not spent your fortune. You have converted portions of it into a series of ongoing obligations, maintenance contracts, mooring fees, escrow timelines, compliance reviews, and a standing question from the SEC about whether any of this constitutes market manipulation, which their legal team will be working through for several months. The fortune is still largely intact. It is slightly different in shape. It has produced, by conservative estimate, 47,000 pages of documentation. And here is the thing about $300 billion, which is the thing this question was always actually about. Wealth at that scale is not an amount you can move. It is a position you occupy. Spending it is not a transaction. It is a reorganization of infrastructure. You cannot spend it in 24 hours for the same reason you cannot remove a particular concrete pillar from a parking garage in an afternoon. It is not that the pillar is too heavy. It is that 17 other things have been quietly leaning on it for years, and nobody thought to write that down.